financial reporting, streamlining the ACFR. My name is Todd Bykema, and I'm one of the assistant directors here at GFOA. I'll be moderating today's session. If you have any questions throughout this webinar, you can submit those. There's a Q&A feature in Zoom. You can post those in there. We have someone from GFOA, Jake, will be in the background answering those questions. Some, if depending on time, we might actually try to answer those during the session live. Before we get into the details, I want to go through some of the CPE requirements. If you're new to the GFOA model for webinars, we've changed how we have to do our CPE requirements to meet all the national reporting standards. So this is a 50-minute webinar. So in order to get your CPE, you need to be logged in, stay on the webinar for the full 50 minutes. There's also going to be a series of polling questions that'll come up. There'll be 4 questions throughout this next 50 minutes. And in order to get CPE, you need to answer 3 of those 4 questions. If you answer all 4, great. There are no right or wrong answers to these questions. They are based on the content that you're going to be hearing from our presenters today, but there's no wrong answers to those. So whatever you answer is great. Just at least we know that you are participating in the webinar in order to get the CPE. So those will be launched, and we'll keep those up for no more than 90 seconds. So make sure you answer those when you do see those on your screen. So there's no verification codes at the end of the training. Your participation, staying logged in and answering the questions, will serve as our way to validate your participation in this. In the next day or so, you'll get an email back from GFOA saying that you've met the requirements to earn CPE, and then be prompted to go back in the learning management system where you can fill out an evaluation and get your CPE certificate. So with that, I want to get into our what we're here to learn about today, preparing a timely way to prepare an ACFR. So GFOA is undertaking a new initiative. It's one of our Rethinking initiatives. And right now we're in the middle of doing Rethinking financial reporting. So we're like producing these financial statements. They're lengthy, they're very technical. Wondering, is this the most efficient way to build trust with government citizens? Is a finance officer's time well spent spending all this time working on an ACFR or any general purpose financial statements? I'm going to put a link in the chat. You can learn more about our initiatives. Website here, we've got a paper you can download saying why that we are doing this. But we thought, as part of this process, though, for those governments that are preparing ACFRs under the current rules, is there ways we can learn some efficiencies and get out a more timely ACFR? So we have some local governments that have achieved a faster reporting turnaround time than usual. You think about in this GFOA Certificate of Achievement program for the ACFRs, that we require that governments submit their ACFR to us for the award within 6 months after their fiscal year end. We have some governments here today that are doing that in a lot quicker turnaround. They get their reports done in 4 months or less. So we're wondering, well, what are these governments doing? Are there things that other governments could do to reduce their time to prepare an ACFR? As a former auditor and preparer of ACFRs, I think what we're going to hear today will be a great help to those who are trying to figure out ways that they can reduce their time in their ACFR preparation. So I want to introduce our speakers. Each one's going to introduce themselves, what government they're from, and then also answer this question for everyone. You think, well, if I'm going to go through all this process, what benefits are there? So as you introduce yourselves, what benefits have you gotten from producing your ACFR in this 4 months or less period? Why should we go through this process? Corey, let's start with you.
Okay, so my name is Corey Johnson. I'm the Assistant Finance Director for the City of Fridley, which is a city in city in Minnesota. We have a population of around 30,000. And to the why go faster question, by earlier preparation, like we in the finance department, we feel more confident, less stressed, and better prepared. For me, the ACFR prep and audit go hand in hand. And in my 8 years here, I have been the audit lead and the point person and the one responsible for bringing everything together. And one of the things that helps us go faster is we have monthly meetings with each department. We go through budget to actual. And during those meetings of face-to-face time, it allows them to tell us about grants, position changes, forecasts, any issues. So like that's a huge help in going faster, like I say, feeling prepared. And then we also are able to pinpoint where we would expect actuals to be, where they actually are, easily able to spot revenues that are unbilled or miscoded accounts. So I think like one of the biggest benefits of going faster is just catching things quicker and feeling confident with where your actuals are at year end and knowing who to go to for what. So those are kind of my big things. Thank you.
Thanks. Jessica?
Good afternoon. I'm Jessica Jones. I'm the finance director at the City of Concord in North Carolina. And a lot of the same things that Corey said, but I think the big thing for us is, for one, it's required by the state of North Carolina that we have our audit submitted to the state by October 31st. We're a June 30 year end. So it keeps us in compliance with that. And it also, since we have to go to them for debt, it ensures we don't have any issues when we need to issue debt. It helps with our conversations with rating agencies when we are trying to issue debt. Timely reporting really helps in getting those higher ratings. And then it also just helps with those conversations with management to ensure they have accurate data. So.
Thank you. Jay?
Hi, I'm Jay Kahn. I'm the Director of Finance and Operations at Lake Bluff School District in Illinois. I actually started my career in the private sector where closing quickly is the norm. So this seems very natural to me. The biggest plus for us is really just closing out the year when it's still relevant to everyone. After 6 months, people have moved on and they're already thinking about next year and aren't really focused on the past. Being able to focus on the current year, closing out the past year, focusing on the current year, and really using those results to learn and make changes and benefit from the data. Like Jessica, I have a October 15th deadline, so I'm able to meet my state deadlines without having to file for extensions, which many of our districts do. I can finish up my continuing disclosure requirements, send out my reports to bond agencies and MSRB, and be first in line for awards like the COE from GFOA.
Great, thanks. Melanie?
Yes, my name is Melanie Keaton. I'm the Deputy Finance Director for the City of San Antonio. We have about 1,500,000 residents, quite large, with quite a bit of activity that goes on here. We also have 27 component units, which is going to be fun for the ACFR. But really, one of the benefits that we've gotten for being faster, number one, employee morale. It's you're not burned out and chugging along trying to do an ACFR that's basically already a year past, both on our side and the auditors. But also, it's allowed us to have a better bond rating, which is less cost for us to do major capital projects in the city, and lets us pivot really quickly in relation to when we have recessions or when we had COVID. We were able to actually, by doing some of the stuff which we'll talk about throughout this presentation, help with not only the year-end closing and the balances, but the monthly reviews. We were able, during downturns in economic activity, we were able to pivot really quickly and avoid furloughs and layoffs because we can see what our financials are and trust them throughout the year. So that has definitely helped us and helped as part of our budget processing.
Great, thank you. Darlene?
Hi, my name is Darlene Wilds. I'm the Deputy City Auditor from the City of Columbus, Ohio. And I'm going to be echoing a lot of the things that have already been said. I worked in the public sector, did SEC company audits, so we were always used to getting things done in 30 days. So the City of Columbus, we get our ACFR done in 30 days and audited within 30 days. I'm sorry, 90 days. I wish it was 30 days. We've been a AAA rated city for 30 years. And we've been getting this 90-day deadline completed for about the last 20. As was also mentioned, we believe that timeliness and the quality of the financial reporting is a factor that's considered by the rating agencies and their overall assessment of the government, which we think contributes to lower interest costs. As part of our capital program, we approve a capital project plan each year, which requires us to issue bonds. So having the ACFR completed early allows us to share that document with rating agencies and investors with timely financial information. And then also, I just think getting the ACFR done quickly allows us to focus on the current year and what's going on with the financials in the current year.
Great, thank you, everyone. So with that, we're going to hear our speakers today go through some items they think will help improve their speed up the time in producing their financial statements. And we've divided these into these 4 different principles that we're going to be discussing today. So the items that these 4 monthers are using, these topics here cover from the Lean Six Sigma models, where we talk about modularization and continuous flow. In their paper, we're going to be releasing on this in the near future. We actually have this as like one item, but for presentation purposes, we're breaking these out on here. We're in modularization, and we can do parts of the ACFR without having our numbers done. We can do this stuff throughout the year. We can take some chunks of the ACFR. We can work on that throughout the year. We don't need to have our final numbers from the general ledger system to produce our ACFR. We can do some things ahead of time. In our continuous flow, we're doing some things throughout the year as well that helps in our ACFR preparation. So we don't consider this batch processing. That's where you're waiting on a whole bunch of information from someone, process it all, and then move on to the next. That'd be more, it's kind of a waste of a person's time. They may think it's efficient, but it's really because you're waiting on someone to do this. So some things that can just be done throughout the year as transactions take place. Let me get into this visualization where we have, how do we make this process? We want to do these timely ACFRs. We got to get everyone's buy-in on this, and how we get others involved in it. We can see what this process is about. Then you'll hear about handoffs, where we have one person does something, has to be moved to the next. So the more you can eliminate those handoffs. So like you think about a race, and I was never a track star, but I watched some track meets where you have to pass the baton around to go 4 by 100. Well, if you drop the baton, that's a problem. You're out of the race. Well, here you want to minimize those handoffs. Or if we're going to do handoffs, we know where they're coming. So who's going to take over that process? We're going to make that as smooth as possible. Then you get into the standardization, where we get rid of all these variable things that would occur. We try to standardize our processes throughout the year. Look at some standard operating procedures that can be done at the government in order to prepare the ACFR. So you'll see we're going to focus on these 4 topics and how we can better, more timely prepare our ACFRs following these 4 buckets that we're going to be discussing today. So our first one gets into we're going to talk about modularization. What can we do throughout the year? Break the ACFR up into chunks and discuss and work on things that can be done before we've closed out the fiscal year. We have a number of different items on here. You can see that are subject to some modularization. First, Corey may want to talk about some of the prelim audit work that you've done that you currently do at your government.
Sure. So approximately 3 to 6 months before year end, we meet with our auditors. And we talk about new GASB standards. As we all know, there's been a lot of those lately, and some are really complex. So we ask our auditors whether they have templates, how much they're willing to help us, implementation dates, and get that all on the schedule and get really familiar with those new standards. And then we determine dates of the preliminary audit, the main audit, financial presentation, because ours has to go to council, document prep, and then who's doing what. So getting all of that laid out ahead of time is really helpful. And then we schedule a preliminary audit, and that's approximately 1 month after year end. And that's just really good timing. Like we were saying, a lot of things just happen during the year. It's not like all the work we need to do at year end. So this can take care of anything that has more of an absolute cutoff at year end, like we're not making changes afterwards. And at Fridley, we include bid testing, OPEB, confirms, disbursement registers, narratives. We have all of our narratives and policies, and we note any changes, anything having to do with budget, because like budget is done, payroll accruals, prepaids, collateral, December, bank recs and investment reconciliations. So I really have found the preliminary audit to be incredibly helpful, because we can like mark off 1/3 of the total items just there in January. So we have a calendar year in here. And then the more you can produce at this time, the less that there will be to do for the main audit. And in addition, the more detailed review you do early on, the less that will be discovered during the full audit. And I found that we just had ours a few weeks ago, and it's like, oh no, where's this information at? And oh boy, this got coded wrong. So like the more things like that you can review and check before you get to that crunch time, I just highly recommend it.
Thanks. Jay, have anything else on preliminary audit work?
Sure, yeah, we also do a prelim audit. I wish I could take credit for thinking of it, but in reality, there are over 800 school districts in Illinois. So just as a practical matter, in order for the audit firms to get everybody's reports done on time, it's common practice to schedule a prelim audit and then a final audit. Our fiscal year end is June 30th. And in May, we schedule a 1-week prelim audit where we can get quite a lot of the items out of the way, do all the accounts payable and payroll testing, internal control interviews, get the trial account balances ready to go through any bond issues that were done during the year, record pension liabilities. So there's quite a bit of work that gets done in May. And then in August, we do the final numbers when everything's been recorded and the fiscal year is over, our final actual to budget and our MD&A. Also, in June or July, I start work on the introductory section and collecting data for the statistical section. Those things I really don't need to wait till the end of the year because a lot of that data is available. It's just publicly available data and doesn't really depend on my results. And if I had waited till all the audit numbers were in, it'd take a lot longer to finish everything. So I kind of do those in parallel and work on those two sections as early as I can get started so that it's not being done in crunch time at the end of the audit.
Great. Yeah, so from a former auditor standpoint, I mean, doing that internal control and compliance testing before the year end, we can knock some things out early. I guess from a good, as someone on the other side too, luckily where I was, we didn't have findings, internal control issues and on financial reporting and that. But if we do things early, we can, even though they are going to be an issue that might be reported in your single audit or your compliance report that for the state you might have, you are getting those before the year end. So you have some time to fix those as well. They can identify some issues. You can address those before the end of the year, then carry that forward and start the new year on a clean, sort of a clean slate, knowing you're identifying these issues ahead of time. Also, like for the statistical section, introductory section, one of the things like we do our trainings for GFOA, it's one of the things I talk about too, is like, even though the statistical section's at the end, we shouldn't be doing that waiting in the order of the ACFR. Don't do that. Wait till the very end for that. Like those, we see this picture, we got these tax tables. Like Jay said, you can get this stuff ahead of time. Information is out there. You don't have to wait till 2 months after your fiscal year end to get this information. Go out there, figure out who your major taxpayers are, who the major employers are in town. A lot of that statistical information can come ahead of time. And with the introductory section too, as major initiatives are coming on, that can like start building up your notes that you have in for your transmittal letter and start including that. So you don't have to like rethink at the end of the year, what did we do this past year? Sort of get that running file going of issues to address in your letter of transmittal. Now, Corey mentioned it, a lot of new standards have been issued. Some you have to make adjustments to your financial statements. Some require collaboration outside your finance department. Think about leases and SPIDAs that have been recently issued. You had to reach out to find out what contracts are out there subject to these. Some of you might be going through GASB number 101 on compensated absences right now. So a lot of work is being done for those. I think, Darlene, you got some thoughts on implementing new standards that you've used at the city.
Yeah, we think it's really important just to stay informed on new standards as GASB is developing them to understand the impact on our financial statements. And we do that by subscribing to email notifications from GASB and being connected with the GFOA community postings. We also make an effort to attend the GFOA annual GASB update each November, and the GFOA annual conference, both the national and our state conferences. And then when there's a new standard to be implemented, we work it into our annual schedule early in the year before the auditors start their preliminary work. We develop our approach and determine the impact on our financial statements for presentation to the auditors during the planning stages to get their buy-in. We found that this approach prevents like last-minute rework and changes that can delay the completion of the audit in the ACFR. Specifically with the lease GASB, we did the work early, and we determined that leases were immaterial to our financial statements. So even though we had to put a lot of work into it, it didn't really have any impact on our statements, but we needed to be able to prove that to the auditors before they started their planning work.
Great. So that I'm going to launch our first poll here. So we heard about a few of these modules that could be done. Which of these does your government work on or before the end of the fiscal year? Okay, we need to answer at least 3 out of 4 polling questions during this session. Like interim audit work has taken the early lead here. I'm sure it's a popular one with governments. I know auditors they have some downtime. They want to get out there and get some of the work they have to do no matter what done. So,
And Todd, I will say from San Antonio's standpoint too, one of the things we do so that we can issue the single audit at the same time as the ACFR is we actually have the single audit done at interim. So about 3 or 4 months before we even close the fiscal year, they are testing 6 months worth of single audit. We do an actual CFA. We actually also do an interim ACFR at the 6-month level. But we do an interim ACFR with estimated expenditures for the end of the year to select programs. And they start all the testing and do basically the bulk of their sample testing for single audit before the year end is even there to cut down on the amount of focus they need to do at year end for that. And as we discussed with the 27 component units, we make sure that we send out those reminder letters to the component units in the summer, because our year end is 9/30, to tell them, here's your deadlines, here's what you need, and what we need when we need it in order to get their information into our financials so that we can close timely. And that's the same with the 17 ISDs that San Antonio has for the statistical section.
all right, yeah, and here, sort of even, but interim audit work did take the win here. 38% of you were doing that. So that'd be great. A quarter of you doing all these things ahead before a fiscal year end. So that's great. Maybe hopefully the ones that said none of the above, they can start working on that going forward after today. So with that, we'll get into our next topic on continuous flow. So these are things we're doing throughout the year at our governments. Some transaction happens, or we're just get in a routine of doing some things throughout the year to have lessen our load at the end of the fiscal year and trying to close out the ledger and get the ACFR prepared. Jay, I think you had some comments on interim statements.
Yeah, I'd really just staying on top of your financials. At the end of every month, we're checking our balance sheet, ensuring everything makes sense. If anything looks unusual or I can't explain what is in an account, I'll dig into it and make corrections. And really, if you stay on top of it, it's easier to figure out why things may be off because everything is current. And then keeping the clean balance sheet really means I don't have a lot to do at the end of the year, because every month I'm going through and making sure that it's correct. Also, each month I'm looking at budget to actuals, seeing if that makes sense. If everything, sometimes things get booked to the wrong accounts, and I have favorability or unfavorability where I don't expect it, or really, and I can distinguish between real business changes or things that are unexpected versus just accounting errors. And so I'm going through and cleaning up those things, and then closing out all open POs every month. That lets me know, if I have any outstanding bills or if there's people aren't billing me and I'm getting behind, so that at the end of the year, I'm not waiting on people or getting surprise bills after while I'm trying to close the year. So that's kind of how we stay on top of things.
Okay. Melanie, I think you hinted at before, but you also do your interim statements and interim statement review.
Yeah, so we actually, like I said, as I mentioned before, we do an interim single audit, CFA and CISA for our state. And I saw a question there from Nicole in here. We're able to basically project what our expenditures would be for the next 6 months based on historical. So we kind of know which programs during the summer, you think of the after school programs maybe that you'll do, or the immunization for the next school year. We know what those spends usually tend to be historically. And so we're able to do an estimate, and we'll talk about that further on in here about doing estimates. But it's just something to get close. And that's a way of knowing which programs we definitely will test, so we can get started on that. But we also do an actual full-on government, basically modified to full accrual interim report, just to keep people fresh of how to do it, see if there's any issues that are coming up that we need to address, and to roll forward if there's any new implementations of where we have beginning balances or adjustments. So that allows us to do a lot of this stuff really throughout the year and do it early.
Yeah, I like the preparing a CFA in the interim. Great way for you to understand what your major programs are going to be. One of the nice things about single audit compliance is that this is not a secret. You can download all the audit programs. The same information your auditors are going to use is available to anyone. So once you know what your expenditures are, you can determine what your major programs are going to be, especially if you have a brand new one that exceeds the thresholds. Remember, thresholds are changing with the new uniform guidance that went into effect this past year on October 1st. So look at when it's going to be effective for you. But if you have a new program, if you're under the old rule 750 yet, new grant, that here's what they're going to look at, and you can be prepared for those, what they're going to be auditing during their field, whether it's interim or at year end. Corey, I think you had some other stuff on grants and interim review as well.
Yeah, so we set up expectations government-wide that finance will be notified of all signed grants. And this will include a main internal contact for the grant. So details to gather, what's the type of grant? Like, is it federal, is it state, local? How's the payment of the grant? Because this is what can get us into trouble sometimes. Like, are we getting the grant money up front? Is there a matching requirement? So finance meets internally with our main, I'll call them grant getters. And we actually have it as an audit requirement because we had one grant that was paid up front, and we just recorded it as revenue and got in trouble for that. So this is one of the things that it's a positive change now. We're on top of everything. I look at all of our council minutes too, just in case that somebody's not communicating. So yeah, we meet with them at least quarterly, and most importantly, a month or two before our main audit takes place, and we match those expenditures to revenue. We figure out, do we need to accrue anything? If so, when will we be requesting the reimbursement? And in the case of grant money paid up front, like, have we spent it all? If not, make sure to record it as a deferred revenue. And I think for a lot of us during the COVID years, like especially federal grants, like a lot of money became available. And, the single audit, like Melanie was talking about, like that's very common for our city now. We used to have one every 5 years. Now we have one every year. And even with the minimum requirement going up, it's still just over $1 million. So yeah, just really important to keep on top of those grants, make sure you're reporting them properly, and yeah, making sure staff is super comfortable communicating with you.
Darlene, I think you had something also on your schedule of expenditures.
Yeah, we also, just like Melanie, we also do it's kind of an interim CFA for 9 months of the year. And we're very decentralized when it comes to grants. So we need to get the buy-in of all our departments that we've captured all the proper information. So in going through that process twice a year instead of just once, we tend to catch all the errors or things that need to be fixed before we present it to the auditors. And then the auditors determine they determine their major programs from that 9-month schedule. And we have about 8 to 10 major programs every year. And then for December 31st, we roll it forward for them, and they have less work to do. It sounds like all of us have had issues with, maybe the single audit being the part of the audit that kind of can go long and be hard to wrap up at the end. So that's really cut down on that problem for us. And then also work throughout the year, working on conversion entries, specifically with debt, since we do have a debt issue every year. Whenever we have a debt transaction, we go ahead and prepare the disclosures and any financial statement numbers that need to be presented related to the debt issuance or refunding, just while it's fresh, and we can put all that information together so that we're not struggling with that after year end. So yeah.
Jessica, I think you had some other conversion. You work on the capital asset side.
Yeah, so similar to, what we've discussed on some of these other items, just kind of staying on top of it throughout the year. We actually have our staff accountant that is responsible for capital asset additions. They review those throughout the year. They actually have to approve the purchase order if it's being coded to our capital outlay account, so that we can make sure that if things are getting coded there, it's appropriate, and we can kind of be talking about what the asset is on the front end. And so we, monitor those. He reviews those, and every quarter tries to get those additions that happen that quarter, especially vehicle and equipment purchases that are pretty straightforward, get those added in. For things like projects, we can't necessarily add those throughout the year because, if it's construction, you kind of wait till the end of the year to see if it gets finished or where it's at the end of the year. But we do still review those entries and kind of be talking to departments about the different components maybe of that project. So we have a good idea of how we might need to add that at year end, and kind of work through some of those questions ahead of time versus waiting until year end to do all of that. So it makes that process a little bit easier if we're checking on those and asking questions throughout.
Great, thanks. One thing, I've been always a fan of these doing conversion entries throughout the year. When I worked at the college before I came to GFOA, that was something we installed. We start every time I made a debt payment, twice a year we had our bond payments that we'd make. It would be, okay, we'll get the cash out, get the debt service expenditures recorded, and then go in our conversion fund, or we call it the GASB 34 fund then, and undo that. So we get rid of the expenditure, reduce our debt. Capital assets, and we had a lot when I was there. We're doing a $500 million bond issue for building new buildings and renovating existing ones. So if we fell behind in our capital asset recording, it was going to be very difficult. We would not have gotten our ACFR done in a timely manner at all. Within 6 months, or we got ours out less, but it would be very difficult if we did not stay on top of capital assets. And as we had a capital asset accountant, so anytime we knew we were purchasing things that are above our threshold, those would get capitalized right away, and we can start doing that depreciation. And we had a lot of projects going on, so a lot of his time was spent on the CIP. So as we're capitalizing that CIP, and then of course, when things go into service, we need to move it out of CIP and then get it as a depreciable capital asset. So our buildings or building improvements, and then we can start running system, and then we do depreciation expense each month. So we weren't waiting to the end of the year on some big number. We'd always get that depreciation report each month and get that posted into our system. One of the questions I see that was come through, and sort of backtrack a little bit here and talk about our grants. Is there templates that you use for your departments, like for a CFA or for any other grant management, to make sure you're capturing all this data? Like Melanie said, they do this interim CFA, and it's a great way to know, hey, am I missing some data? Do I have all the assistant listing numbers and all the pass-through entities? So I was wondering if people have talked about single audit. If you have how you're doing that tracking of those grants with all the different grant managers you might have.
Well, we actually in San Antonio, I should start with, we have a very disaggregated method of our business. So we have 40 different departments, and technically each department is responsible for their own grants. So in order to set up accounting structures in our ERP system, though, we have a specific set of funds that are designated for federal grants and ones for state grants. So for them to even create the master data to start the process for grants and to use those funds, they have to go through central finance. And in that, with a checklist, they give us the ALN, the grant award, any matching requirements, kind of the basic bare bones that we need so that we can help them basically create the fund as well as load the budget as needed. And then having it in the system set up that way, it actually allows us to extract from the system, our ERP, which we use SAP, it allows us to extract basically by funds. So we have like 21 star, if you will, is our ARPA. It allowed us to extract basically all the federal grants that were from that particular, that are federal in nature, and we can pull it in with the ALN, and we'll pull that in separately.
Great.
City of Columbus is very similar to that. We use Microsoft D365, and we have the whole grant setup process that people have to go through. Again, we're very decentralized, same as Melanie. So we need to, get all that information ahead of time, but then all the revenues and expenses are processed through our ERP system, and we're able to put out a CFA pretty easily. We just need the departments to weigh in on whether we've coded it correctly, and if there's subrecipient information and all those types of details when we're putting the CFA together.
For Fridley, similar to you guys, we're smaller. So basically I have an Excel document. I read through all the grant information. If there's anything confusing, I will reach out to that contact. But it's basically, like I was saying before in my little grant spiel, like type of grant, when we're receiving money, how many years the project is, what are the requirements. So if you get like a nice template set up in Excel, simplest way to do it, just easy to track it throughout the year as money comes in. And I also track expenditures. What have we spent on the project? So it's a worksheet that's good to create early on and then go back to on a regular basis.
In case people haven't noticed, poll 2 is up there. I'll keep it up for about 15 more seconds. Jay talked about this, it's like a balance sheet review. Like there's more reconciliations than just cash and investments. Those should be done on a monthly basis. Don't get me wrong there. But there are other balance sheets. Like when I was at the college, we had numerous balance sheet accounts. I was fortunate enough where I had a larger staff where we could divide up all our different accounts, and those are reconciled each month. So we want to make sure our accounts payable was equaling what was in the general ledger. So we had our subsidiary. Here's everyone that was owed at month end. Is that what is rolling up to the GL? That way we know if we had some issue with posting. Did something get posted wrong? Did we have a linkage problem between our subsidiaries and our main ledger? Looking at tuition receivables, a lot of students come through. We want to make sure that all those major balance sheet items were being reconciled on a monthly basis. So we had no surprises at year end, unless something happened between May and June before we closed out. Otherwise, we had issues, we could address those throughout the year. So maybe doing monthly reconciliations of all your balance sheet isn't practical because you have based on your staffing size, but maybe our rotation, like doing cash and investments each month, maybe looking and have a rotation of your other balance sheet accounts just to make sure they're on the radar for the government. So when you get to year end, it's not as heavy lift to make sure everything is being properly recorded. I'm going to share the results of poll 2 here. It's great. We have 40% of the people doing all these things listed on here. So that's great. But yeah, I think I love the continuous flow methodology. We're doing these things throughout the year. So we're sort of easing our burden at the end of the fiscal year to try and do our CAFR. Next topic we have is on this visualization. So it's sort of getting everyone's buy-in on here. We got a lot of players involved with an ACFR. You have your staff, obviously they're a very important role in getting your ACFR done. We also have external bodies you have to worry about, getting your audit firm on board. Here's when we want to do this ACFR by. So it means you can't have an ACFR until you have an audit opinion. So you have pension or OPEB obligations, so you have to get actuaries involved. Melanie mentioned about all the component units. We have these other entities that we have to incorporate into our financial statements. They could be discretely presented, they could be blended. So we have some other buy-ins we have to get from people, other entities, to get our ACFR done in time. Melanie, may you want to talk about the component units and your actuaries that you deal with at the city?
Yeah, sure. So we have various component units that are both blended, discretely presented, and fiduciary. The fiduciary are key, obviously, to the RSI because there's the pension and the OPEB. But we have, I guess, various degrees of sophistication and staffing in our component units too. So one of the things we do every year, number one, is we want to make sure that there's been no significant changes even in the determination of whether there continued to be a component unit. So we actually have them complete the component unit workflow every year. Is there any changes in bylaws or anything like that, just to take a look at? And we give that to them usually in the summer. Again, the city closes September. So we'll send that out in about July or August. And we tell them to give that back to us by November, as well as the fact that they have to give us their financials by January. Which for some of them is very difficult. They usually have September year ends as well, and they just haven't worked with their auditors to maybe necessarily do some of what we're doing here in advanced interim audits and such. So San Antonio helps out and actually does reviews of the component units financials. We will help be a reviewer. We will give them additional insights. Honestly, this past year, we recreated and built out their financials for some of them because they didn't have the right people necessarily knowing how to use the system. So it was QuickBooks and they didn't know how to use it. So we built from cash flow or basically bank statements and rebuilt their entire financials for them. So it's just helping out because it impacts us. Actuaries, we have various actuaries for, of course, the OPEB pension, and such. We're also self-insured for workers' comp and general liability, and we actually we work with our actuaries on the self-insurance twice a year. So we will do full data loads, dumps again to the actuaries twice a year, and have them do a full run with an estimate so that we can see where we are, if there's any skews in our actuarial liability. And that, number one, helps us give an idea of where we are for processing and timelines. But it also helps us own the reserve at the end of the year so that when we book it, we are really, the city owns and we are fully comfortable with that number. And it's not just something an actuary gives us and we plop it in the books, which sometimes happens. Plus that helps us for budget for next year because we start seeing trends in relation, like right now with costs of auto and everything going up, we've had to adjust for our budgets. So those are some of the things we've built into our timelines.
Okay. Jessica, I think you had some things with checklists and dealing with your auditors.
Yeah, so I think that one of the things that's really worked well for us is we do have a checklist, and it's just in Excel. It's a really simple checklist, and there's one overview one that the person that kind of manages the audit can use to track what everybody's doing. But we do also kind of give each one individual schedules as well for the person that's responsible for it, so they can really focus in on what their responsibilities are. Because when you look at the big schedule, it can get overwhelming. And like it looks very similar to on this screen, the one at the bottom right there with those audit tasks. That's kind of what our checklist looks like. And so you can look at it by person, look at it overall. And the important thing when we're trying to set up this schedule is to really think about when certain things can be done. For one, like you can't put an unrealistic time frame on there if the data is not available. And two, to be thinking about who else needs the data in a timely manner to be able to do what they need to do. So for example, we can't really finish capital asset additions for projects in particular with construction until the AP process is fully done, until we finished accruing those invoices and doing retainage and all of that stuff. So understanding the impacts of the timeline, and if one thing gets pushed back, who else it impacts, the schedule really helps to clarify that, and help everybody have visibility for that as well. So we have found that that really helps us. And when we're setting up this schedule, we also talk to our auditors early about their schedule to try to understand when they're coming on site, making sure we've got that scheduled early on so that we can plan vacations and other things appropriately, as well as like when they would need, since we do draft our statements in-house, when they need the draft to have sufficient time to review and get it back to us, so that we can just have all of that clarified really, really early in the process, and that impacts our schedule. And we do, throughout every audit, we always come across things that should have been on the schedule or that we need to add in because something else came up that we hadn't thought about. So it's a living document that changes. So we just we make notes on it, and the next year we make sure that gets incorporated in. So it's important to keep it accurate as things change for your unit too. So.
Great, thanks. Before I turn over, I'm going to launch poll 3. Darlene, I think you have some issues dealing with your auditors and have actually stuff in your audit contract.
Yeah, in order to make sure that we can complete the audit in 90 days, we actually put it in the contract with our auditors. And when we do go out to bid for a new auditor, we make sure that we put in the RFP that they can demonstrate that they can actually get it done within 90 days, if they have the staffing to make that happen. We also have to get their buy-in with how the process is going to work, because obviously if they come out in January or February, we're not going to have final numbers for them to start looking at. So they have to really buy into, as we get these different areas completed, we're going to hand that off to you so you can conduct your audit work. And then, having some trust that, everything's going to come together within the last few weeks of March, to make sure we can get a good sign off. And similar to what Jessica was saying, we sort of do a project plan where we have a, start date and an end date on when different documents will be ready. And so the auditors can plan their work around when they need to have staff available to do those different audit areas. And then, you have to be able to build some trust and actually comply with those dates, give the stuff to them when you said you were going to give it to them. So yeah, definitely getting a buy-in and cooperation from the auditors is key.
Okay. Well, time we're going to try to go through this one kind of quickly on our standardization. First of all, maybe Melanie, want to go through some standard operating procedures that the city has implemented?
Yeah, so some of the things we do, just even from kind of the at year end, we look at various revenue estimates and expense accruals. So we will make assumptions again that if we know goods and services have been received and we haven't gotten those invoices, we'll do estimates based on, usually it's based on the PO, because we already know that we created a PO. So we know that what work has been done, so we can pretty comfortably make estimates. If the invoices come in after year end, while we're still doing the audit, and it's not materially different than the estimate that we did, we're not going to adjust it. So you have that SOP there. We have built in rules, again, based on historical averaging and actuals of what we've seen, to do allowance considerations. We have municipal courts here. They do basically traffic fines and stuff. So there's deferred adjudication, there's KPS warrants. And so we look at kind of what that historical collection is, and we'll make allowances for that. So that's built into the SOP, what that kind of allowance is. Same for EMS transports. And then bigger thing, actually, because we don't use any type of special software system for the financial statements itself, we use Excel and Word. We built a Excel workbook that we give to one person to basically own, and they will put in the financials for each fund that the accountants prepare and provide to that individual, so that there's one level of ownership. And that workbook has links from the combining statements all the way up to the government wide. And then we also, and that includes any blended component units discretely presented. And then that also has a link to the major fund determination. So we actually use that, and it's locked down. It has foots and crossfoots and error checks. So it makes sure that that we're entering stuff correctly, and that it's kind of error proofing it.
Yeah, error proofing is a big thing. Darlene, I think you use your software for some of this as well.
Yeah, on the next slide, yeah, we have a cross checking tool, a validation dashboard within our software that, you know, it does take some time to set up, but once you set it up, you're able to make sure that the numbers that are in the statements are also match the numbers that are in the notes or the MD&A or the statistical section. And when you do update the statements, and we update this software with basically a trial balance, we import a trial balance. Whenever those numbers are updated, you can go back to this spreadsheet and make sure that everything was updated properly across all the different areas of the ACFR.
So yeah, we started talking about the checklist, and we got a little bit on some of the templates. Melanie hinted about doing estimates for things. I did that too when I was at the college. We would have do some revenue estimates, and also like, for accounts payable too, we would send out some letters. Hey, this is when we're closing. If you notice the big invoices out there, we're not going to get them. Talk to your vendors and give us some estimates of what those might be, so we can accrue those. The other big topic on here is materiality. Like how are you determining like what's going to be material in your financial statements? Sort of open that up to Jessica. I think you've had some comments on this.
Yeah, so I think this is another conversation to have with your auditors early on too, to kind of understand what, if they're comfortable with what you're using for your materiality kind of conversation. They may not tell you exactly what their materiality calculation is, but you can kind of have a conversation about, do you agree that this, what that materiality threshold is, if it's reasonable that you're using. And I think it's important to make sure staff understands, because as accountants, I think we tend to really want everything to the penny, right? So helping them understand that sometimes that's not worth the time investment for it to be exactly to the penny. So kind of like what the conversation was around the AP accruals, right? If you made an estimate and you calculate it and it comes in and it's $10,000 off, that may not be material enough to go back and actually do an adjustment. And just helping your staff understand why that's okay, and having those conversations early on too, so that they're prepared for that. And then, like when you're doing your statements, we always round our numbers going into the statements to begin with, so that eliminates some of the chasing. You still end up chasing some dollars through it. There's no way around it completely, but and at some point you just have to pick something to adjust by the dollar, right? It's not worth going through and figuring out the best thing to adjust by $1. It's $1. So that's kind of the mentality we've had to have about it is, that's not worth, whether it's AP you adjust by $1 or accounts receivable, doesn't materially change anything. And just understanding that the effort has to be worth what the dollar value is, especially during the time crunch of audit and year end and trying to get back to current year stuff. So,
Great. Well, we've hit our allotted time for the CPE. I want to thank all of you for being a part of this. We had some questions we've been answering. I'll stay on for a little bit and try to answer some others that have come through, but I want to thank all of you for your insights into this. You'll be, like I said, introductory, that we'll be doing a paper that we'll be issuing on materiality in the near future as well, incorporating some of these ideas that we discussed today as well. So again, I want to thank everyone for being on, thank our speakers for these great insights, and then we'll see you down the road. Have a good day.
Recording stopped.